Introducing RABBY, the first gold indicator that visualizes price detachment for high precision entries. RABBY is not a blind signal generator. It is a momentum dislocation scanner. Here's the logic. Markets have an equilibrium zone. When price moves slightly, it's just noise. But when the candle body physically detaches from this equilibrium, a true trend is born. Most indicators get fooled by wicks. RABBY filters them out. The algorithm analyzes the relationship between the candle body and a central baseline, so it ignores the wicks to identify the true sentiment of the move. If the body doesn't detach, RABBY stays silent. The interface is clean and visual. Blue bars indicate bullish momentum dislocation. In other words, the buyers have taken control above the threshold. Yellow bars, on the other hand, indicate bearish momentum, so sellers have successfully pushed the price structure down. But we didn't just stop at entry levels. RABBY plots dynamic volatility bands. The lime and red lines you can see here. Now these adjust instantly to market volatility, giving you visual reference points for stop losses or trend validation. And the most important rule for any professional tool, non-repainting. RABBY signals are confirmed only after the candle closes. Once a bar is painted on your chart, it remains fixed. No disappearing acts, no excuses. While we optimize this logic specifically for the volatility of gold on the 5-minute chart, the physics of price dislocation works everywhere. You can use it on the Nasdaq 5-minute chart, Bitcoin 5-minute chart and up, and on the major Forex pairs from the 15-minute time frame upwards. I'm now going to show you the difference between a good quality setup versus a lower quality setup. Once you receive an alert from RABBY, you always want to make sure that you can get at least a 1-to-1 risk-reward ratio. So let's have a look at this example over here. You can see that we have the blue bar painted there at the close of candle. So your entry will be at the close of this candle, your stop loss will be at the lower band, and then if you're scalping, you just want to go for a 1-to-1. Now what I would like you to pay attention to is the distance between where you enter the trade and the stop loss. And then compare that gap to the average size candles you can see before the entry. And as you can see, this is within range. So we can quite comfortably get our 1-to-1 risk-reward ratio on this particular setup. Now on this particular chart, you'll get another alert on this bullish bar. And the reason why you'll get an alert is because the previous candle did not have a blue bar. So it will always give you an alert on the first painted vertical bar at close of candle. So this particular opportunity here, if you look at where you have to enter the trade, you look at the stop loss, which is at the lower end of the band, you'll see that the gap between where you enter the trade and the stop loss is huge compared to the average size candles. So whenever you see something like that, then it's best to avoid that opportunity. Let's have a look at another example. If you look at this first yellow bar over here, you can see that when you enter this trade, your stop loss is not too far away, so the probability for you to get your take profit is quite high. Same with this opportunity over here. If you look at your entry, which will be at the close of this candle versus your stop loss, it's relatively tight, so you can quite comfortably get your 1-to-1 risk-reward ratio. And if we look at this opportunity here, this first blue vertical bar, if your entry was at the close of candle with your stop loss at the lower band, you can see that this is really wide. And price needs to travel quite some distance for you to get a 1-to-1. So this is another example of a low quality trading opportunity. RABBY is available on the MT4 and MT5 trading platforms. Link is in the description.